What's up, guys? Finally back on track with the content. Today's the 15th, and it's gonna be a day. I don't even know what day we're fucking on. Let's check. What day of the boot camp are we on, guys? We're on day 23. Wow. So this is gonna be day 23 of the boot camp. In my opinion, this is gonna be one of the most important days, especially with how the market has been trading right now, as I think this is one of the most important concepts to understand, and it is essentially like the new type of liquidity in these markets that's working, as you always have to adapt. And right now, this is like, if you could trade this, you are very profitable. If not, you're getting fucked lately with all the fake outs and manipulation moves and blah 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 blah. So let's get into it. What is today's lesson going to be about? Well, today's lesson is going to be on LRL, which stands for low resistance. Well, let me fix my keyword. Low resistance liquidity versus HRL, which I'd hope you're smart enough to consume, stands for high resistance liquidity. Bang. Now, what are the differences? Well, to start, let's put in simple terms. Low resistance, I hope if you're somewhat smart, you could think, well, low resistance means low resisting. So LRL, it's like a type of liquidity that's more likely to get taken. It is a easier path and with no obstacles to just get ran through. Well, HRL is like a more high resistant liquidity. Like, for example, if you're trying to target a high that's just been resting in a bearish or value gap, like it's more likely going to get rejected off and not get hit. So now, first, let's go through the examples of. Well, first, you have to understand what a swing high and a swing low is. So let's first go through these examples. Sorry, I'm literally doing all this in live time, so you're going to have to deal with this. I'm not editing this. You could fucking watch. Wick. Okay. So this is a swing high. A swing high is where we have a high, a higher high, and then another high. So where would the swing high be in this? The swing high would be right here on the higher high. It is a 3-candle pattern, kind of like FEG, but obviously just a high, higher high, and then a high. Now I'd hope you're smart enough to say, well, if that is a swing high, what's a swing low? Well, a swing low is going to be a low, a lower low, and then another low. So I know it's off portion, but it doesn't really matter. And the swing low would be right here. Swing high, swing low. You're going to have to understand this. So now, actually, before we do anything, I just want to go through examples in the chart of what a swing high and a swing low is so that you can understand it. Okay? So what is this? Swing low. Swing low. Swing low. Swing low. You see what I'm talking about? Like, swing low, swing low, swing low, swing low, swing low. Okay? These are all swing lows. Now, vice versa, if we were going to show a swing high, come to something like this. Swing high, swing high. You kind of tell when they are because it just peaks, Swing high gets broken, we run the LRL. Okay. So that's how you identify your swing highs and lows, right? So now, what is low resistance liquidity? What is this? Well, low resistance liquidity is it's almost like liquidity where there's constant like resting orders where it's going to be very easy for the market to come around. So it'd be something like this. So if we're in a downtrend, LRL would look like this. Why? Well, look, we have, what is this? We have the swing high, right? Followed by, this would be like another swing high. Followed by, this would be like another swing high. This would be another swing high. And then you'd have this be another swing high. Now, do you see how none of these swing highs are getting broken through? Well, that is because it is LRL, meaning we're just stacking liquidity after liquidity after liquidity after liquidity after liquidity. So this is almost like trendline liquidity. See how we have now just all these? They're not breaking each other. Like, it's not like this, where this high came and broke this. It's literally just pure down, up, down, up. Like, it's just normal downtrend with all this LRL. Now, what this LRL means is now price is likely to, okay, say right here we had Asia lows. If price sweeps them, maybe we tap into like a 1 hour FEG, right? Price sweeps them, and now we take the first trend line. Now we just broke through the downtrend, and this would be high resistance liquidity. So then this would be something where you would take like a long right here. Stop loss would be at the protected stop. And then you could target all of this trend line liquidity. And most of the time now in this market, you'll see price immediately like go like and just flush right to your TP where you're like bang. So this is LRL. Now, let's hop into some examples on the chart of just showing you LRL. Well, actually, let's actually also draw the LRL going in an uptrend. So this is a downtrend. This would be the uptrend. You see? As what do we have? Well, we have a swing low, swing low, swing low, swing low, swing low, swing low. As you can see, none of these are getting broken. None of these lows are coming like this, and none of these lows are breaking that. No, they're just continuing this. So then, same thing, it's like vice versa over here now. When you get to this top, maybe we just swept London, and maybe you have a gap. Even if you don't, it's fine. We'll say we don't for now. Okay, you just swept this. Great. You got your confirmation you need. Maybe wait for the pullback. Oh, all this trend line liquidity. See all of this. Bang. Run that. And then price would probably most likely just flush. Like when you time this right in these markets, price doesn't like the bullshit. Price likes to literally just do it in like 3 candles. So now this is low resistance liquidity. This being a downtrend and this being an uptrend. As you can see, and then I'll write some things so you can write these as notes. In the downtrend forming, in the downtrend forming the RL, comma, swing highs are being put in and not being broken. So see, in the downtrend, swing highs are getting put in and they're not getting broken. Now, in the uptrend, forming LRL, comma, swing lows are being put in and not being broken. As you can see, uptrend, swing low, swing low, swing low, they're not getting broken. Now let's show some examples of this, also called trendline liquidity, whatever. So we're going to show 5 examples of LRL in a, let's go with LRL being built while you're in a downtrend first. Sorry, I'm trying to actually find really good like examples. Alright, this is an amazing example. Look at all this LRL and look how price reacts. So first, what do we put in? We put in the initial swing high. And then what? Swing high. Swing high. Swing high. Swing high. Swing high. Oh. Swing high. And then what happens? Oh wait, swing high finally got broken. Did we tap into anything else? Probably. I mean, I'm not going to look right now because I'm not in replay mode. We'll get to that in an example. But now what? Oh, it finally got broken. We got our confluences. We long. This is now a protected stop loss. This will give room for that order block to play out. Run all the LRL. Look at this. Trade bangs 2.6 R. And this was at, what is this, 14:30? That's 4 p.m. Oh, God. No, that's like 2 p.m. 13's 1. Look, see, bangs, bro. Bangs. So that's an example of that. Let's find some more. So that was an example of, running it like when we were going down to up. Now let's find an example of where we ran it up, and now we're going to take it down by... This would be a good example. It just didn't get ran. As why would this be a good example? Well, we start. What is this? Swing low. Then what? Swing low. Then what? Swing low. I'm sure you can start seeing the pattern. Swing low, swing low, swing low. Eventually, I'm sure all that gets ran. See, like, it's not that hard to find, right? Swing low, swing low, swing low, swing low. Got broken there. Swing low, swing low, swing low, swing low, swing low. It all got ran. Swing high, swing high, swing high, swing high. All got ran. Swing low, swing low. See what I'm talking about? Like, it's not that bad. Swing low, swing low, swing low, swing low. Look, all gets ran. Swing high, swing high, swing high. All gets ran. See what I'm talking about? So now that we showed those examples, essentially, now I want to get into what HRL is. I don't know why I drew, so I'm just going to remove everything. HRL. High resistance liquidity. Now, first, let us start with it being in a uptrend. Why is this high resistant? Oh, nice. Swing low. Oh, what? It got broken? Swing low. What? It got broken? Swing low, swing low. See how this swing low got broken? Well, now it's going to be seen as high resistant. Why? Well, look, one, we're in an uptrend now, but two, we just swept some type of buy-side liquidity that we're clearly reacting off. So why would price now want to sweep that liquidity, come up, and then go for a retarget on that when there's stop loss when they're in the uptrend? No. Instead, what you would maybe seem to take is we just swept buy-side. Now you go in the long, and this is protected as price might not want to come back. And then you could target, another type of LRL maybe that was here. See? Ran. So that's pretty much what it's going to be in that situation. Now let's draw what it's going to be in a downtrend. Right? We're in a downtrend. Oh. What got broken? Swing high. Swing high. Swing high. Swing high. You see, so these are all reasons price just swept some type of sell side or buy side, because here would be sweeping that sell side. So we just swept some type of buy side liquidity. Now we're probably not going to come back up, right? Now it's just going to be some mini retracements to catch these continuation shorts. Here, let me move my face real quick so you can see that. See? That's what I drew. Okay. Now I want to get into the I guess we'll show you a couple of examples first. Starts off good, right? We have what? Swing low. Oh, swing low got broken. Now, why would we want to come back to this low? There's nothing below. So instead, you could see this. We resweep it, even more of a reason to buy. You could do some shit like this. You enter here. Put your stops like below this gap. You could target all this previous LRL. Target all this. Could just call this banger. Just using LRL. Let's find some more examples. Oh, nice. Swing low. Oh, cool. Another swing low. Oh, it got broken. And then look, it gets broken. Immediate inverse. Put it on the protected stop loss. Where do we have LRL? Like right here. To the tick. Bang. Alright, so now that we showed all that, I want to get into the pros and cons of this. So, when you have LRL equals amazing DOL. HRL, terrible DOL. Now, LRL is high probability, HRL would be low probability. Now, HRL, great stop loss, terrible. LRL equals terrible stop loss. Why? Well, HRL is protected, LRL is unprotected. So now that we kind of discovered what it is, why don't we talk about how you can base trades off of it? So here's how. Number one, how do you want your stop loss to be? Well, you wouldn't want your stop loss to be, if we're in an uptrend with the LRL, you wouldn't want your stop loss to be, like right here. We didn't really sweep anything. We could still come down. But if you're in like HRL, this is the perfect scenario. Okay, ready? So say we have all this LRL built, right? We have, I'm literally guys showing you guys two examples and we're hopping in the chart, right? LRL, 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 LRL. All of this is now trendline liquidity that's probably going to get ran, right? Right? Well, now, guess what we just had? Right here, we had a London lows. And we had a 4-hour bullish fair value gap. And then we had maybe, like, this is good enough. But then another great thing would be that, like, something like this. So we had and then we had equilibrium of this. Do you need this? No, but the fair value gap's nice. So now what? We just tapped into discounted price. We just tapped into a 4-hour PD array. We just swept a type of sell side liquidity. We have all this trendline liquidity. And now you wait, you maybe see a reaction out of this. We finally break this swing low high. Enter. Stop loss could either be at like a gap right here, or you could just put it at swing low. Target all this trendline liquidity. Bet you that shit fucking banks. Boop. Brrr, bang. TP. Ho ho ho. Green giant. Bang. Promise you that shit would probably happen, bro. So now, if I'll just show you a quick example of if we were going to go the other way. So now look, we have all this trending LRL being built. Right here, London lows. 4-hour fair value gap. We tap it, sweep it, break this. Oh my god, high resistant. Price does not want to go back here. It's protected. It's sponsored. LRL below. Bang. So that's how you would trade off this. Now let's hop into the charts and show some examples. Okay. Let's go to Thursday. Thursday had a really good example. My personal opinion, Thursday was the trade of the year. My opinion. So let's just start on the 4-hour. I'm showing you this one example of how you would trade it. So, as you can see, we have all these DOLs above. We have what? Relative equalize, buy side right here. Pretty much just these buy side draws, right? Buy side right there. Okay, now let's go down. I know what happened, so I'm just skipping down. What do we see? On the 30-minute, though, we still have all of these lower draws that could also be seen as LRL, right? Well, what do we see? We have a what? A 30-minute what? 30-minute fair value gap. Now, this 30-minute is kind of going to be how we base our trade off of. This 30-minute sets as a condition. Is price going to open and flush below this? And then maybe come to take this draw out and then keep coming and take all these? Or is price going to come, respect this CE, and then see a push to where we take out draw after draw, right? So that's going to be like our condition. So now we scale down to just the 1 minute time frame, right? We already got our bias, you got all that. Now, what else is it probably good to have marked out? Well, this range. Now, I'm going to play the candles. Time out. What did you guys just see? Analyze this. Well, we just perfectly tapped in the equilibrium of this whole range. We are respecting this 30-minute gap. We have a little bit of LRL above, not much. I'm not going to lie, the LRL was lower. You know, this could be the short. But no, we tapped into everything else. And then what? So you could have took the long here, which is what I did. But the better trade was if we go to the 15-second, what's this? IFG. Swing low because it's high resistant. Why? Because this is HRL. We swept out a sell side, tapped in C. We have this. Target. Fucking target this for a 1 to 8 RR. One to 8 RR. It's that simple. Now I'm gonna end this around here. We went over LRL, HRL, where you would want your stop. Only with HRL, you want it to be unprotected, or you want your stop to be protected, TP to be unprotected. You don't want to target HRL, you want to target LRL. You don't want your stop loss to be LRL, you want your stop loss to be HRL. Now, with all that said, that is pretty much what I've been using to stay profitable in these conditions with the market. God, boys, I've been working so hard, bro. It's 2 p.m. on a fucking Saturday, and I haven't left my room yet from content. My life, bro. Anyways, I'm gonna go. I hope you enjoyed this video. Peace. Wait. Comment Pringles if you watch this.